payment. There you go, Tammy. Recording in progress. Those last two bullets, those are the things that are going to make this loan work. So projected rents, what does that mean? When we order the appraisal, we are also going to order a Form 1007, which is going to tell us what this property can be rented out for. So we're going to get comparables on the property, not just for value, but for rents. And then additionally, your borrower needs to come with the money, right? Show me the money. Always bring your assets. That's it. No taxes, no documentation for any other property either, like mortgage statements if they already own a property, things like that. We don't need any of that. These are literally the two things that you need. Obviously, we need a credit report, but you need an appraisal with rental capacity, and you need the money for your down payment. That's what's going to make this loan tip. Okay. A couple of things to look out for in terms of your borrower, because there are requirements for that borrower. The very first one that you see there on the bottom line, they cannot be a first-time home buyer. That is a no-no for this product, right? They already have to be seasoned in some way. So they should already own a property, whether it's their own primary home or they already have investment property. Either one is fine, but they just can't be a first-time home buyer, okay? First-time home buyers are going to be better suited for like an FHA or another type of product, okay? So what we're looking for really is for people that are already landlords. That's our prime customer, right? So people that are already landlords, they already have an investment property. If you have that type of borrower, that's going to be great for this type of product. If they don't, that's fine, okay? They can be a first-time investor. That's okay. You're also going to be looking at a lot of people that have their own business. You'll see there in that second little circle, people that want to close in an LLC. So mostly when you purchase a property, you're going to close in your name, right? For example, Tammy Mills, a single woman, or Tammy Mills, a married woman, or joint tenants. You use your own name to purchase that property. Or a lot of people close in a trust. If they have a beneficiary, things like that, they want to close in a trust. This product, however, allows you also to close in an LLC. So for people that have businesses and they like to purchase their properties with their business name and they want to protect their assets, they can do that on this product. So that's a big feature that a lot of people like to use. The other things is that you are going to avoid a lot of paper trail. So if you're looking for a minimum documentation, like the very least that you have to ask for from your borrower, this is going to be the product, because you're going to obviously take their application, you're going to pull their credit, and then you're going to ask them for the most recent 2 months bank statements to see what their assets are. And that's it. No income documentation and no documentation for any of the properties that they already own. No mortgage statement, no, let me see your insurance and your taxes or your HOA, none of that. So very minimal documentation. The other thing is that aside from working with our typical borrowers, US citizens or permanent residents, you can also assist foreign nationals. So people that are actually citizens and residents of another country. They don't live here in the United States. They live in another country, but they want to purchase an investment property here. So we get a lot of people from Canada, from Mexico, from Europe. They have family here, they have friends here, or maybe they just, this is their business and they want to purchase an investment property here. You can work with those people on this product as well. Okay. So that's a little bit of the criteria that they have to already own a property, whether they own their first home, and this is going to be their first investment property, they just own their primary home, or they own other investment properties. Okay, that's really the criteria here for these borrowers. And like I said, you can use a variety of things to close this loan. So a lot of people ask us about Airbnbs. So Airbnb is a really, really huge topic right now when it comes to investment properties. Everybody wants to use Airbnb because it gives you a lot more rental income per weekend, right? So if you want to use Airbnb, yes, we allow that. If they want to use VRBO, which is the other rental site, whatever it is, however the borrower wants to qualify with either a long-term lease or short-term, it's allowable. So if you're in an area, if they're purchasing properties in an area where, you know, there's amenities around there, places for attractions, you know, Disneyland or whatever, a river, a lake, something like that, and that might be a property where they can go and rent it out and they're going to make more money every weekend, then yes, that's completely allowable on this product. Okay. We don't look at, you know, how many properties the borrower has. They can have 50 properties, they can have 100 properties, doesn't matter as long as they're already a homeowner. And you're also going to be able to work on different property types. So you can work on non-warrantable condos. You can do condotels as well on this product. So if you are looking at condos, you don't have to worry about, wait, what if it's not Fannie approved? That's okay. If it's not Fannie approved, if it's non-warrantable, we allow that on this product because this is a non-QM product. So it's not FHA, VA eligible. It doesn't have to be. We will allow a different property type. Okay. And we have all sorts of different financing for our borrowers as well, not just fixed financing, ARM financing, but also interest-only financing. And if they select interest-only financing, they qualify off of that interest-only payment. It works a little bit like a credit card. So every month you're just paying the minimum payment, and hopefully, you know, whatever rent they're collecting, it's more than enough to cover that payment. Okay. They're also going to be able to do cash out. Let's just say you have someone asking questions about, well, what about the future? What if I want to take money out of this property? You know, they're buying it from you, but they always have questions about what they can do later. So if they do, yes, they can take some cash out of the property, things like that. All of that is fine. Okay. All of that is eligible here. Here's a quick little snapshot of our matrix. So wherever you see the LTVs, for example, 80%, that means on this product, which we call platinum, you can do it with as low as 20% down, right? The loan to value, that's what we're taking care of. That's our loan. So in terms of what your borrower is going to bring in, minimum is going to be 20% if they want to do platinum. So for us, platinum, that's going to be our best priced loan for the borrower. That means they're going to get the absolute best pricing that's out there for an investment. So 20% down. They don't even need that high of a score, 680. They have a little bit lower score, down to 660, then they need 25% down. Okay. Then with this product, here's a couple of the requirements that we're looking for. So like I said, 660 is the lowest score that we're looking for, but we can work with their credit in terms of credit enhancement or rescoring them. We want to bump them up a little bit more. Let's just say you want to be able to do just 20% down, not 25. Then we can do credit enhancement to kind of get them up there, right? And we can assist you with that. We also have a product, again, like I said, this one is our platinum. So it's going to be our best priced, but we also have pricing where they only have to put 15% down. Now, 15% down for an investment property is very rare. Mostly with investment properties, they have to put 20% down. So it's a great product to use here because it's less money that they have to bring to the table. Okay. And then again, it doesn't matter if your borrower is already an investor, already has investment or rental properties. It's okay if they don't. If they at least have their primary home, they can still purchase using this product. They can purchase an investment property. And that's what we call, and you'll see that here on the left side, the bottom bullet, first-time investors. That's what we call a first-time investor, meaning that they only have their primary home. Okay. Really what we're looking for is just people that hopefully have credit that is fair or good, right? Because a 660 score is fair. And also borrowers that have housing history. So that's why we're saying they have to own a property, whether it's their primary home or an investment property, as long as they own a property and they have some housing history, then we can work with that. Now you'll see here that I have the four national bullet in case you do come across borrowers that are from another country. Maybe they're here visiting for the while and they say, well, what if we want to buy a property? Can we do that? Yes, you can help them out. We don't require a score from them. They just need to bring 30% down to the table. Okay, and if they have their money, in their country, it's a foreign asset, that's absolutely fine. We allow foreign assets to be used with our foreign nationals. Okay. Now, I really want to just kind of talk a little bit about our first-time investors, because we get a lot of these types of borrowers on this product. So a first-time investor is someone who only owns their primary home. They don't have any investment properties. They've never been a landlord. They're just a regular person, just with their regular home that they live in. And now they come to you and they say, well, I want to buy an investment property. So if that's the case, yes, they can purchase an investment property using this product with no income. However, for a first-time investor, we need a 700 score, and they need 25% down because they're a first-timer. So they're not allowed to do like just the minimum 15 or 20%. They need a little bit more. They need 25%. And the reason is because we're looking for a little bit more profit on that property from them. So the more down payment they give, the more profit, right? Because the payment's going to be lower. So this is going to be your first-time investor. And this is the reason we have it eligible or open. You'll see this a lot is because a lot of times people, they might want to buy a second home, right? But maybe when it comes to the qualification part, they found their home, you gave them their home, you found their home, but once it comes to qualifying, they may not qualify with the income that they have to be able to sustain 2 mortgages, the home that they live in plus a second home. So a way for us to get across that is to say, well, if we use an investment product and we're going to turn this property into an investment, then yes, you can qualify because we don't need to look at your income, right? We're just going to look at the profitability for this property. So that's a great feature of that, is that any of your borrowers really can be eligible for this. Now, here's a quick little snapshot of our other product, which is called Smart Vest. Now, the first one we looked at was Platinum, and that was going to give you your best pricing. This one is Smart Vest. The only reason that we really use this one is because it's going to allow your borrower only to come in with 15%. Okay, which again, for an investment property is very rare. Most banks, most lenders for an investment property, they want 20% down. So that 15, that's an extra little bump for them, right? They don't have to come in with that extra 5%. And this is also the pricing that we're going to use for our foreign nationals or if you have a condo hotel. Okay, so just wanted to kind of give you a quick little look at that. And for that 15% down, we do want our borrowers to have a 720 score. So a little bit more on the higher end because they're putting less money down. Okay. Now, for anyone that does come across borrowers that might be foreign nationals, like I mentioned earlier, we don't require a score. You'll see that there on the top grid. There's only really one grid for them because there's no score required. We just need 30% down from them. And they can do a purchase up to $1 million loan. Okay, so 30% down. They do need a valid passport in order to be eligible. Obviously, they're not going to have a state ID or anything like that. Their passport from their country, that's what we're going to look at. And then we are going to want to make sure that they do have some credit established in their country. We'll be asking them for either credit references or we will pull a credit report on them, an international credit report. Okay, but we don't need a score again because it's not something that other countries use the way that we use, so we're not looking at that. But when it comes to their assets, the money that they have in their country, it's perfectly acceptable for that money, whatever they're using, to be in their country. So if they're from Mexico and they have pesos, that's fine. If they're from Canada, if they're from France, whatever country they're from, whatever asset they have, that liquid asset, it doesn't have to be in our currency. They're going to wire over that money Once we open title and escrow, they'll wire it over to our title company, and then that's fine. We will accept that currency. It'll be transferred there into US dollars at that time. Okay. So a lot of people always ask questions about that. Well, how are we going to get that money if it's in a different currency? It's fine. Once they send the wire over to our title company, it'll get transferred there in currency, and then we'll go ahead and hold it at the title office. So it makes it very easy for our foreign nationals to come here and purchase the property if they like. Okay, so just a quick little tidbit on that. And then we do have some countries that we make sure to look at. These are countries that are sanctioned by the United States, so we can't do business with anyone from these countries. Very rarely do we get borrowers from this country. Mostly it's Canada, Mexico, and most European countries. Very rarely do we get these, but in the case that you do, unfortunately, we're not able to work with them just because they're sanctioned by the United States. So just kind of wanted to show you that. Okay, so what is the gist of this product, right? Like I said in the beginning, this is not a debt to income loan. So we're never going to ask the borrower for pay stubs or taxes or W-2s or anything like that. And I know that that's really different from what you're used to because that's always the thing, right? Make sure you get their income. On this one, we're not going to get their income. On this one, what we're looking at is the debt service coverage ratio. So I'm going to share my calculator with me and just nod if you can see my calculator. Okay, because I know you're all muted. So the way that we calculate a debt service is very, very easy. So whatever the rent is, let's just say you're looking at a property and the rent is like $3,500. You know, hey, in this area, that's about what you can rent this property out. 3,500, you're going to divide it by the payment. 3,500. Meaning 1. That means I want to be a 1-to-1 ratio. If my rent is 3,500, I don't want my payment to go above 3,500, right? I want to have enough money. This is a real life scenario calculation. If I'm renting it for 3,500, my payment can't be over 3,500 because then I have to come out of pocket. I don't want to come out of pocket, right? This is an investment. I want this to work for me. And maybe in the beginning, I'm not going to make money, but I definitely don't want to lose money. So it's a very, very simple ratio. You just take the rent and divide it by the payment. Okay, so 3,500 divided by 3,500 is 1. Let's just say it's a $3,500 rent, and maybe the payment is only 3,000. It's a 1.16 is your ratio. That means you're making 16% profit, right? So what we're looking for is to at least break even with a 1-to-1 ratio. But we know, and people always have questions about this, well, what if the report doesn't come in at what we're looking for? What if the report says that the rents are going to be less, or the payment is just too high, or whatever it is? We do make exceptions to go less. So you'll see here on the third bullet, and it's highlighted in yellow, it says DSCR to 0.8 allowed if 70% LTV, meaning 30% down. As long as your borrower brings 30% down, if they go negative below 1, then that's eligible for us, right? So that means that the profit isn't there. That means, let's just say the rent says it's 2,000 and the payment is 2,500. So they're losing $500 every month. That means they're negative. They're below 1. They're a 0.8. So we'll worry about all those details on our end on the lender side. I'm just sharing this with you so you kind of have an idea of how it works, really. So you always, once you talk to Tammy or Renee and you're bringing them a customer and you're saying, hey, they want to purchase this property, they are going to ask you, if it's going to be an investment, they're going to ask you, do you have any idea what this property can rent for? That's going to be the first question, right? Because we need to know what those rents are. If it's 3,500, then Tammy and Renee already know, okay, I want to make sure I keep the payment under that 3,500. If you're fairly confident and you're like, well, actually, you know what? No, I think we can get like 4,000. That's, for this area, that's usually what we see. Then they're going to make their whole assumption of this loan off of that 4,000. So with this product, your input is valuable to our loan officers, to Tammy and Renee, right? We really need to know what you think. Hopefully you know the area fairly well and you can let us know, yeah, in this area, this is what the property's rent for. If you're leasing the house out for like a year or two, if you're doing VRBO or Airbnb, you might be able to get 5,000, whatever it is, right? But your input is going to be very valuable to us because that's how we're going to get this whole loan started. Everything is based on the rents that the property can collect. Okay. And I just want to take a quick pause to see if there's any questions so far. I don't see anything in the chat, but if anyone wants to unmute themselves, they can if you have a question. Okay. So here's a quick little example, just in case you weren't looking at the calculator. To figure out if a borrower is going to be eligible, all we do is take the rent and divide it by the payment. That's it. And that tells us if there's profit, which you already know what the profit is, right? Because if I just tell you the rent is 2,000 and the payment is 1,500, you already know there's a $500 profit. But we want to see it in terms of percentage, right? So that's how we know if there's a profit or not. And that's really the biggest input that we're going to ask from you as an agent. What do you know about this area? What do you know about this type of property? How much can we get for rents? And that's what our whole analysis is going to be based off. All right. So last but definitely not least, what we're looking for aside from that rent on the property is the borrower's money, right? Not income, not employment, not taxes or anything like that. No pay stubs or W-2s, but what type of money do you have for this down payment? For your 15% or your 20, 30%, whatever you're doing, what kind of money? So we always want to make sure that we gather their most recent 2 months of their bank statements or, assets, whatever it is that they have. We need to have enough money for their down payment. And we always look for reserves. And reserves means that if we're giving you a $2,000 payment, hey, do you have enough money saved for the next couple of months, just in case you don't get a tenant right away? You can make the payment on your own, right? We're always kind of looking for that. So that's going to be something that we figure out on our end as well, but you'll want to kind of prep the buyer. Hey, we're going to make sure that you have enough assets there. Okay, and if they're bringing gift, it's okay. Sometimes people say, oh, so-and-so's giving me some money, they're gifting it to me, or I inherited, or whatever it is. Gift is okay. We use it for some things, not for the down payment, but for reserves and other things, we can use it. So if your buyer tells you that, then that part is okay as well. Okay. So again, this product is all based, and I'm going to go back to that very first slide. The only thing that you have to think about when you're talking to a borrower and they want to buy an investment property is, do you have the money for that 15 or 20% down? And you yourself are going to have to think about this property. What do you think it can rent for? Because that is what the whole loan is based on, whether or not that property can be rented out for a decent amount that it's going to cover the payment. And if it is, then we've got a loan. That's all it takes. This is a very, very easy loan to close. These loans usually close in 10 to 14 days. So it doesn't take much because there's not really much paperwork going into it. Okay. So not sure if you've ever worked on a product like this, but again, it's very easy to close. And usually when you come across people that are already investors by trade, they will mention this product to you. A lot of them, because they've already used it so many times, they already know, and they'll tell you, oh, by the way, I'm going to want a DSCR loan. They'll already tell you that, because they're pretty savvy. They already know the kind of product that they're going to want. So when they're looking for the property, they're looking for something specific. They're looking for a property in an area that is high rental value. That's what they're really going to be asking from you when they're looking for a property. Okay. So any questions from anyone or any input, Tammy, Renee, anything that you'd like to add?
Just to confirm, I think you mentioned though that we're going to order the rental survey when we order our appraisal, correct?
Our appraisal, yes.
Okay.
Yeah, that
So
can,
having at least the data from our partners in regards to what the rents are going for the area, like you mentioned, is key, so that we can
yes.
at least get them in. Because we also pre-underwrite our conventional and our FHA and VA buyers, is this something we can also do or offer to them as well?
Yes, we can pre-underwrite them. We can look at their credit and their assets just to make sure everything is good there. But the majority of the weight for the loan is going to hinge on that rent.
Right.
So that's why I
Okay.
mentioned it's super important to talk with our partners, to talk with our agents and say, hey, do you know anything about the area, about the neighborhood? What do you think this home can rent out for? That's really what the basis is for the whole loan, is whether or not the property can support itself with its rents.
Okay, and I think you touched on this, but because this is a non-qualifying product, even if they go with the 15% down payment, there is no PMI, correct?
There's no PMI, yes. All of
Okay,
our loans, they're non-QM, meaning that there's no PMI, everything's already built into the rate. So they never have to worry about that additional little extra.
okay, great. And we're looking at full PITI, right? Principal, taxes, and insurance when we compare it?
Yes, unless we select interest-only financing, which we do have available. And if they do, so the interest only qualifies on the interest only payment, the ITIA, not the principal portion, just the interest, taxes, and insurance. So it makes it a lot easier. So when, for example, Renee and Tammy, when you're working with Kathy, Jocelyn, and Comfac, you can just say, hey, okay, we're looking at this property. What do you think it's going to rent for? And they'll give you a ballpark, 3,000. So then from there, it's your job to say, okay, let me see if I can get that payment to 3,000, whether it's a fixed loan or an interest only loan. As soon as you hit that 3,000 mark, then you can say, okay, we've got a deal. Let's book it. Let's get into contract. We can make this happen. But for sure, we're gonna ask you agents, hey, what do you think about this property? What do you think it can rent for? So hopefully there's some other information that you're able to gather on your own, or just if you're very affiliated with that property, you do a lot of transactions there. You might already know, yeah, that these homes rent for $3,500, $3,500 a month, whatever it is. And then that way we on our end, we know, okay, this is the number we're working with because this is what we know it's more than likely going to come in. That's what we're going to base it off of. Of course, once we actually get into contract, then that's when we're going to actually order the rent schedule. It's going to be ordered along with the appraisal. But initially, we want to do our kind of like our little verbal assessment based on what you tell. Mm-hmm. So that input is crucial, and really those rents are what this entire loan is going to be based on. So again, the borrower doesn't have to bring any income. They don't have to bring any taxes or pay stubs or anything like that. All of that is a non-issue. We just want to know, you're going to put a tenant in there. Whatever rent they give you, is that enough for you to make that payment? If it is, then we're good to go. There's not much else that we have to figure out because we're really not adding any debt to the borrower. They're not going to be responsible for that payment. That money's going to come from the tenant. So we don't really have to qualify them on their income. We're just going to qualify them on what the property can do.
Okay, great. And if they wanted to vest in their LLC, we still have to pull an individual credit report though, correct?
Yes. Yes. If they
Okay.
did say, I have a business and I buy all my investment properties and I put them in an LLC, that's fine. They can do that. However, we still use their personal credit. We don't pull entity credit. So it'll still be in their name, in their credit, in their personal credit. Okay, so that's basically the gist of this product. It's not that difficult. There's not really too much going on here. Again, it's really just the rents versus the payment. That's really how we make the loan work. It's very much like a commercial loan. If you've ever done a commercial loan, that's how someone qualifies if they want to buy, you know, like a gas station or a liquor store. They qualify based off of what that business is going to do, not off of their own income. So it's very, very easy to qualify it. It's a very quick close. There's not much else to it really. It looks like there's a question there. Says, what are the interest rates today on these loans? So like I mentioned in the beginning, we have one section that's called platinum. So platinum is going to be our best priced product. So you'll see, depending on the borrower score, of course, right? If they have really great scores, they're in the like 700, 720, 740, you're going to see rates in the high sevens, low eights. So maybe 775, 8%, 8.25%, right? If you're using our other product, which is called Smart Vest, this is the one with less money down, right? Only 15% down. This is the one that you have for a national, things like that, right? A little bit different features. Then you're going to see higher rates. You're going to see rates in the 9.5% to 10% range. So there is a big difference there. Platinum is more of our, I guess we could say, our cookie cutter product, and that's why it does give you the better pricing. But everything is based on the down payment and the FICO score. So the bigger the down payment, the better it's going to be, the higher the score as well, right? But it's going to vary there, but that's usually what it is. Does it allow for a rehab budget? So unfortunately, we cannot combine our non-QM loans with renovation. So if the property is not inhabitable at that time, we would not be able to close it with a non-QM loan. We would have to do a renovation loan. That's something totally separate. So there's things that we can allow escrows for, you know, outside, like tiny things, like maybe a little bit of paint or things like that. But if it's not an inhabitable property, then no, we cannot close it on non-QM. It has to be, once we get that appraisal, it has to be as is. And if there are repairs that are called out, they have to be done before we close. So we need that final clearance on that report. Okay. So this is going to be, because it's based on the rents, it does have to be something that's a little bit more ready to take on tenants right away. If they're going to have to keep it for a few months and rehab it and, you know, redo the whole thing, restructure it, all that, then that would be a different product that we would want to put it on, not this one particularly.
And no limit, correct, Cecilia?
No limit on what? I'm
sorry. One of the questions, is there a limit of how many properties an investor can have?
No, there's no limit as to how many properties that they have. They could have 100, they could have however many. It doesn't matter, because again, we're not qualifying them on their income. Now with us, we have a limit of 8 loans with us.
For finance, correct? 8 finance properties? Okay.
Finance. If you want to do more than 8 loans with us for one borrower, then we just need an exception on that. But in terms of what the borrower already has, they can have as many properties as they have. It doesn't matter. It's not an issue, because we're not qualifying them on their outside credit or income. We're only qualifying them based on the subject property. I didn't see anything else there on the chat, but I don't know if you see anything else there.
So what I did, guys, is in the chat, again, I've seen most of familiar faces, but you guys will want to reach out directly to me because I am your loan officer there in the office, either me or Kathy. And Cecilia is our support in our in this division. So any questions we have, I can go directly to her. She's quick to respond. But the key here is we will be your initial point of contact for you as well as your client, and be able to kind of get them in a position to get them pre-approved or even pre-underwritten if we need to do that. But I just wanted to get this product out to you guys. I'm gonna also invite Cecilia back probably within the next 60 days to go over our Smart Self product, which is our bank statement program for self-employed borrowers who either are truly self-employed or 1099. And then we also have one other product, which is our Smart Edge. So this is just one of the 3 series that we're going to bring to you guys. But like I said, thank you so much for joining us. And was there any other questions that we can answer for you guys?
I have a quick question.
Sure.
Cecilia, can you ever refinance this loan? After how long?
Can you refinance?
Yes.
Yes, they can refinance these loans. They can do what's called a rate and term, meaning that they're only refinancing the balance, or they can also refinance to get money out, to get cash.
Yes.
So in either case, it's fine. Yes.
Is that done in 6 months or 1 year?
So for cash out, it's
What
you
are
have
the
to own
terms
the property for at least 6 months.
Okay. Thank you.
Sure.
Okay, awesome. And I've also recorded this. So if you guys, know of anybody in the office that might want to have this, by all means, just have them reach out to me. And we're going to start a library on our class recording, these classes so that we have them. But Cecilia, thank you. I appreciate you so much.
Oh, you're welcome. Thank you, Tammy. Thank you, everyone, for being on here.
Thank you.
Hopefully you learned a little bit about this product. It's very, very easy. Like I said, all we really need is to make sure that the borrower has their money ready for that 15 or 20% down. And then we just want to make sure that we get a little assessment from you as to if you know anything about the property, the area, the neighborhood, to see what that property can rent out for. That's how we make this loan work. It's very easy, super quick close. So if you have people that come to you and they're kind of like in a hurry, they're like, hey, I'm going to go out of town, so I got to close this quickly. This is the product to use. Okay. So thank you all so much for joining us today, and we'll see you soon. Take care.
Thank you, guys.
Bye.